Hey everybody, welcome back to the channel. One of the questions that I get asked all the time is how do I find the right homeowner's insurance policy for me? Maybe I'm purchasing a home or have never bought a home before, and that's one of the things in the home buying process that you actually have a lot of control over. So today I'm going to talk about sort of the ultimate guide and how to determine which insurance policy you should be looking at for your home. So if you don't know me, my name is Landon. I'm an independent insurance agent, have been for about a decade, and have helped hundreds, if not thousands, of clients figure out and discover which is the best insurance policies for them. So I'm going to break things down as simply as I can today to hopefully help enlighten you as to how to best find the insurance policy that's going to fit for you and your family in whatever situation you may be in. I sort of like to walk customers through a model, a basic 3-step or 3-portion model that will help you find sort of the intersection of the best value that you can find out in the marketplace for the insurance policy and company you should be working with. So if we think of it, we'll look at 3 different types of portions of this. We'll look at currency, and that is what it is I'm going to be paying for the insurance policy. Then I'm going to look at coverages, and coverages is obviously all the different intricacies of an insurance policy. You know, how much coverage I have for X, Y, or Z. And then finally, claims. And claims is really where the rubber meets the road in the insurance industry and where you are going to find the most benefit of the insurance policy. So I'm going to try to talk about all 3 of these so that you understand sort of some highlights of each and then how you would kind of inform yourself as to which policy and company ultimately you should work with. So we'll start with currency. There's a lot of things that go into the cost of an insurance policy. And so I want to just highlight what some of those are, and then we can do a much more in-depth study on the actual cost of the policy. But suffice it to say, there's a few things that matter. Number 1, your credit score. Credit is an extreme driver of the cost in today's insurance market. All these insurance companies will gather as much information about you as possible, and they've figured out that those of you that have great credit often have less insurance claims for one reason or another. And then if you don't have great credit, you may file more claims or use the policy more. And so that gets factored into the actual price that the insurance company will charge you. So another main factor is the age of your home. The age of your home should obviously matter because the older a structure is, the more likely it may be to be at the end of its useful life. So the insurance company is going to say, when was it built and when was the last major renovations done to the property? It can affect the values, it can affect the equipment that's in the home. We might be talking about electricity, heating and air, the roof itself. There's lots of things that go into this equation, but the age of the home in general is another point that we want to make sure we understand, and it will greatly affect how much the policy costs. Number 3 is what is your personal claims experience. You may know this if you've purchased homes in the past or if you've used insurance in the past, but a lot of times insurance companies are going to charge you more if you have a history of actually using the coverage. I know that kind of stinks. Nobody likes to hear that. Obviously, you buy insurance for a reason, and that is to use it. But over time, the insurance companies have figured out, again, that if you use the insurance policy a lot, they're obviously not going to be able to collect enough premium from you to outweigh what it is you may use out of the policy. And so they're a business, they're trying to make money. So your claims experience is one of the greatest factors that actually go into the price of the policy. Now, let's for a minute talk to the group of you out there that may have already purchased a home before and have had insurance policies before. And so let's say you've had a few different claims that you've worked through. I will tell you that not every claim is weighted the same. Some claims like water damage and fire, those are things that the insurance company will look at and say, if there's water damage and it was because of a broken pipe, for instance, in the home, what is the likelihood that the home might have another broken pipe because the same plumber that put the plumbing in may have made the same mistake somewhere else. Or maybe just the plumbing itself is at the end of its useful life and it's going to break. So the insurance company is going to actually look at that and determine if there's water damage claims. They might say, I'm probably not like this risk, or you as a client, because of the fact that that home has older pipes in it. So that's a big hit. So if you have water damage on your insurance policy or claims history, I should say, that is a definite indicator that the price of the coverage will be more. So all of that to say, the other side of that coin is claims that are less frequent, things that don't happen as often, things that don't cause you as much problem. One of those may be catastrophe claims or wind and hail claims. You can't help it if you've had a major storm blow through and rip off the roof. So there are often forgiveness elements to an insurance policy and a rating factor when the insurance company considers all of the claims history. So moving on, number 4 in the basically calculation of cost would be the location. Not all locations are going to be created equal. This should be pretty evident. If you are in a coastal region of the United States, your insurance policy is probably going to look a little different than if you're far inland, but not too inland. I mean, if you're in the Tornado Alley areas, you actually are probably paying the highest insurance of anybody in the country. So it really depends on location. But if you're in a relatively weather isolated area, I'll call it, where you don't have a lot of weather events, the insurance policy is probably going to cost you less based on the value of the home than anything else. It also will depend greatly on, are you in a city or are you in a rural area? If you are out in the countryside, there are just sometimes fewer claims issues than if you are in a city. Conversely, if your fire department is located very far away from you, they actually may charge you more for the insurance policy because if you had a fire, the response time of the fire department may be pretty delayed. So location, it definitely matters when it comes to the cost of the policy itself. Now, number 5 would be bundling. You've heard this term a lot in the insurance business and the insurance industry, and that is if you collect all of these policies together in one company, they typically favor that and will give you a better rate. Obviously, if the insurance company can help you with several different pieces of your insurance needs, they will oftentimes give you the benefit of the doubt and lower the cost of the insurance that you have in general. So bundling is a big deal. I'm not going to touch a lot on that because it's a pretty well-known topic in the insurance space, and we'll probably have more content about that in a future video. Finally, probably the most determining thing when it comes to how much a policy is going to actually cost you is the amount of coverage. Probably should have been number 1, but suffice it to say, the bigger the home you have, the more that insurance policy is going to cost. And in the context of actually understanding this whole system of homeowners insurance, if we are trying to determine what company to work with, the amount of coverage is going to greatly matter. So if you have a large home, maybe it's $1 million house, that's going to cost you an exponentially amount more than if you had a starter home at $200,000. And that should be pretty evident. But you should also know that the companies will vary based on the size of the risk. So one company, say company A, may be better at covering a larger house than company B, but company B might be best suited for you if you have a starter home. So it very much matters, and figuring all that out and what that's going to cost you is a complicated venture. And I'm going to give you some tips here at the end of this video on how to help you through that process. So all of these things right here are going to go into the cost of the insurance policy. So a large portion of this model, one of the biggest, is going to be which company should I work with if I want to make sure that my coverages for the policy are in the right order, and what coverages should I think about when it comes to this insurance policy? Well, coverage is the most important aspect, in my opinion. Obviously, I'm an insurance professional, so this is something that I champion quite a bit, and that is the coverages matter. You may be in the process of purchasing a home today, and maybe your lender or real estate agent has offered you an insurance plan through maybe a partner or a vendor that they work with on a regular basis. Typically what I see, and this isn't every time, but typically what I see is oftentimes the lender and the realtor are trying to get you the best and cheapest insurance policy that they can. And I say best, cheapest. And cheap, by the way, is a reference to value more than it is cost, because they're trying to basically give you something to get you to closing with the least money out of pocket, or the least amount of impact to you that they can. And so I really caution buyers often on taking that first option that's given to you during the process of working with a realtor or lender. They mean well, and some of them work with excellent insurance partners, but some of them are simply trying to get you an option to get that part of the process done. And my challenge to you as a buyer, and if you're watching this video, you would probably understand that you got to understand a few more things about it. So let's get into that. So first and foremost, we need to understand, as we talked about over here on the cost side, that is the value of the home. Now, this can get very confusing because there are 3 distinct values that you will see as part of a real estate transaction. You're gonna see the market value. That's how much you're actually paying for the property itself or the property in question. Number 2 is the tax value. You can go to the taxation website of whatever municipality you're working with and see what the value is that they assign to that property, because then they determine how much your property taxes are based on that. So the tax value and the market value, those are the first 2. What insurance is most concerned with is the replacement value. And again, this value concept is probably another video for another day, but just suffice it to say, replacement cost is what we need to focus on. So how does your insurance company actually go about figuring out the replacement cost of the product? So if I'm to look at this, we need to be sure that we understand the replacement cost. The replacement costs are things like how many bathrooms, how much square footage, are we 1-story or 2-story? Do we have a basement? What other amenities are in the home? Is there a lot of built-in cabinetry? Are you using solid core doors? Are you a very, very custom home, or are you a home that's built differently or built more economically? So you have to understand that all of that goes into the calculation of what the actual replacement cost is, and that isn't a quick, simple process. You need to work with somebody that's going to actually help you understand or walk you through what's in the home. It doesn't have to take a lot of time, but a quick conversation with your agent, whoever that may be, is going to highlight for you how to best determine the replacement value of your property. Now, number 2 in the coverages section is going to be what liability needs do you have? But liability itself is super, super important when it comes to the actual insurance policy. You want to make sure that liability is in place to protect you and your assets. It's not just about the value of the home. It's about how much net worth do you have? If something goes wrong or you cause a problem or there's negligence on your behalf outside of the home, how does this liability policy actually work for you? So you need to think through that. I recommend limits of not less than $500,000 up to $1 million in liability coverages. Fun fact, liability insurance, the liability that comes as part of your homeowner's insurance, is the least expensive portion of the insurance policy in general. So don't sacrifice on it, bump that up, and because I think that's gonna be super beneficial to you if there ever is truly a problem with the liability portion. Thirdly, water damage. And I'm using this broadly. There's actually a couple different things to think about with water damage. Number 1 would be flooding. Flooding is often not covered, repeat, not covered in a traditional homeowner's insurance policy. You often have to buy a separate flood insurance policy in order to make sure that that is covered. And with recent natural disasters that we've seen in our country, it is incredible to think that so many people do not have flood insurance that truly need it. So understand what your location is like, and do you really need to consider flood insurance or not? Second, wind and hail coverage. Now, I'm talking water damage, everybody. Why is he bringing up wind and hail coverage? Because oftentimes, if you are coastally located or located in an area where there are greater windstorm problems, your windstorm hail coverage may have a different deductible structure to it. And I bring this up in water because when rain is hitting your home, if you are in the path of a hurricane, for instance, that may be considered wind and hail coverage or wind and hail damage that basically allows water to get in. You want to figure out and understand how much the insurance company is going to make you pay first if there is that problem. So understand how water damage is triggered within the policy. That's going to help you better determine which coverage to have on the policy itself. Number 4 is simply review times 3. Review, review, review. Get with an insurance professional that can help you understand what it is about the coverages that matter most within your policy. My rule of thumb is never buy what you don't understand. Keep asking questions until you do. Whew. Okay, so let's get over into the claims section. How do we determine the best insurance company to use based on their claims experiences? All right, so claims are where it's at. Claims are where the rubber meets the road and where you as a buyer and as a homeowner need to understand how your insurance company that you're choosing is going to respond in time of need. So I'm gonna break this down in a little bit different way because I think there's some things within the claims conversation that we need to talk about. Number one would be you need to research, I usually use Google, the insurance companies that you are considering. Now, you're gonna go to Google and maybe type in the name of a company you're looking at for home insurance. You can type in that company and you're gonna see thousands upon thousands of really, really bad reviews. And that's because insurance is one of those industries that everybody loves to beat up on, and probably rightfully so in many cases. But what you need to do is kind of work through those reviews in a little bit more detail and try to draw out the people that really talk about how a claim was handled. How was the communication of that claim? How was the payout? Was it fair? And was the process simple and understandable? There are certain companies out there that just have a very complicated claims process. And really the best way for you as a consumer to figure that out is to do a little research on the front end to understand which companies are doing better with customer service than others. So my first tip is just research. Number two, try to figure out, and if you can figure this out, bonus points for you. Not that you can't, but it just can be difficult. And that is adjusters. Adjusters are very important to the claims process. You are gonna be working with an insurance agent to actually buy the policy itself. But then when it comes time to file that claim, you are gonna have to work with an adjuster. That's someone that's gonna value the property and help determine how the policy that you purchased will actually work. Which portions of the policy are triggered based on whatever event has occurred for you. So here's a tip. You wanna try to find insurance companies that typically use local adjusters or adjusters that are pretty much paid for or W-2 employees of the company itself. So in general, you wanna find local adjusters versus third party. Now, how do you go about figuring that out? You have to have a conversation with the agent that you're working with. Big box companies like State Farm and Geico and some of the other larger companies in our country, Allstate, they have adjusters that are local to the area that you live in. And where that benefits you is that they know what street you're in, they know how to drive to your place or your property, and in general, they are going to try and figure out the best way that the policy is going to be triggered. Stay with me here. A third-party adjuster is someone that doesn't work for the company that you're insured with and doesn't really work for you either. They are contracted by the company that you're working with to show up at your property and blankly look at the policy itself and then the damage and figure out how it needs to work together. But in the claims process, there are always going to be changes and things that happen that you need further communication with your adjuster about. You might be having a contractor dispute or some other issue with the claim being paid, or maybe there needs to be one other piece of information that the adjuster needs to relay back to the company. Oftentimes those third-party adjusters, some of them are great, again, but in our experience, those third-party adjusters tend to be much slower with responding to the needs of the customer. That's why local or captive adjusters that work for the company that you're insured with, they've been trained on customer service, or at least they should be. They've been trained on how to handle that client communication that's so important when it comes to the claims process. So in general, find the insurance company that uses captive adjusters, local adjusters to your area. It will make your claims process so much smoother. Finally, number 3, the bigger the company, the better? Not always. But let's talk about it, because it is true that larger insurance companies have just a much bigger system built out for them to operate within. So they typically are process driven. They have experienced a lot of different things. And so they have a method to handle just about any situation that you can throw it. Contractor's not responding, they can't get estimates, they can't get in touch with the right people, they have a process. Now, where that also could hurt them is that they're so rigid sometimes that the gray areas of an insurance policy, and there are many, get difficult to work through. So you have to understand, again, more about your risk and your tolerance for, dealing with the customer service end of the industry. Figure out who it is you want to work with. So the smaller companies are often represented by independent insurance agents. Those independent insurance agents can give you a better and broader view and often work for you when it comes time for a claim. That is a big benefit to you. And they work with some very large companies and some very small companies. But my advice to you here is get with an independent insurance agent. So we call ourselves IAs, independent insurance agent, so that you can get the right company when it comes to claims understanding figured out. So this is a very complicated process, but I hope that this model helps. Feel free to skip back and forth or wherever you need to in this video to figure it out. But in general, the question of what company you need to work with is going to boil down to which companies are going to fit within the 3 bubbles here that we've talked about. How is the price of the policy? What coverages are being offered by that company? And then how are claims handled? Again, you may have a company that lives over here in this section where maybe it's a low price and they handle claims well, but the policy itself is very small, very stripped down, not really well thought out policy. This is where you may find some of those quick referrals coming from. The other option would be maybe it's good with coverages and good with claims, but it's just really expensive. And those policies exist. And maybe that would work for you if you had a very, very high-end home, or you just had a brand affinity towards a certain company or another. Maybe that's why you'd live in that world. And then the third situation you may find yourself in is maybe the coverage is right and the cost is low, but the claims handling is atrocious. If you're not gonna have a good claims experience, I challenge you to try to find the company that will give that to you. That is where, again, the best companies will be located, is kind of that happy place where all 3 of these will intersect. So I hope all of this has been helpful. I really look forward to helping you along the way. If you have comments or questions, please leave that here in below. Whether you're watching this on YouTube or another platform, just leave it in the comments section. And I do look forward to responding to you soon. Thanks.